Good morning, and welcome to the General Motors third quarter 2024 earnings conference call.
On today's call, management will make forward-looking statements about our expectations. These statements are subject to risks and uncertainties that could cause our actual results to differ materially. These risks and uncertainties include the factors identified in our filings with the SEC. Please review the safe harbor statement on the first page of our presentation, as the content of our call will be governed by this language.
During the opening remarks, all participants will be in a listen-only mode.
Hello, everyone, and welcome to Kilowatta podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host. And on today's episode, we're going to talk about GM's Q3 2024 earnings call. I should let you know that this was an actual earnings call with a bunch of financial nerdy information and not what Tesla gave us a couple of days ago, which was an extended version of their We Robot event. So on this earnings call, they actually did talk about earnings. It was weird. A bunch of financial stuff that I don't understand and doesn't necessarily translate great to this podcast. But it was the most earnings call that I've covered on this show since I've been doing it. So because of that, I had a couple of choices. I pulled some clips from Mary Barra's opening remarks. I pulled some clips from the chief financial officer's opening remarks. And then I pulled some other analyst questions that, quite honestly, I felt like I had to wedge in those questions to make them relevant to this show. So what I decided to do, instead of making you sit through stuff that really wasn't relevant, is I just pulled less clips. We're not going to hear Mary Barra's opening remarks, anything from that, to be honest. Nothing from the chief financial officer's opening remarks, because these are all things we've heard before. So I have 3, maybe 4 clips at the most, including Mary Barra's closing statements. And then we're going to be done. It's a quick, easy peasy earnings call for this one. So let's go ahead and start off with our first question.
Thank you. Our next question comes from Edison Yu with Deutsche Bank. Your line is open.
Hey, good morning, and thank you for taking our questions. First, just on Cruise, we noticed that you indicated that the autonomous miles have gone up about 3x. Just curious, have you given any sort of rough framework on when you might return to actually unsupervised testing like you were before?
Yeah, we hope to one will be gated by safety, but we hope and we're working hard to get there by the end of the year, meeting the higher standard of role model driver as opposed to, I'll say, average human driver. So that is the goal that the team is working hard to every single day.
I really like the term role model driver instead of average driver. First of all, this makes sense, right? In any average, you have the people who do great, and then you have the people who do not so great. So saying we're not going to be better than the average driver, we're not going to train on the average driver. We're going to train on the role model driver, or what we think the role model should be. I think this is great. I think this is a really reasonable approach. Of course, GM Cruise has got, a lot of baggage in terms of what they've done in the past with their autonomous driving software, or autonomous driving service. But yeah, I like this. I think this is a good direction for GM Cruise. Let's go ahead and go to our next question.
Around the sort of walk of $2 to $4 billion in lower EV losses next year. And this is a question I've been sort of surprised that I've been getting from investors, so I'm going to pass it along, which is, if EV sales were flat or down year over year in 2025, could you still achieve that $2 to $4 billion in lower EV losses? It's sort of my way of asking the election question without asking the election question.
Well, I'm not sure that's an election question as much as it is what are consumers looking to do. But we've seen the recent uptick in September month, both in terms of demand, but also us getting share gains. And so I think that there is an element of growth next year for us. in EVs as we continue to bring our products to market because the customers are responding to those. So, when you look at what we were able to do to give our customers access to the Tesla supercharger network, we're out there proactively addressing things like range anxiety with vehicles that have over 300 miles of range, as well as supplementing that charging infrastructure with a really efficient solution for them. So we think that there's an opportunity to continue to expand that. Clearly, as we've articulated for the last year or so, scale is an important piece of it. But what's more important is making sure that we scale to demand, and we're there with a flexible portfolio for consumers and meeting them where they are. So obviously, if we don't grow as much, those scale benefits aren't going to be as fully realized. But our best estimate today, based on the momentum we see and where we see EV adoption going next year, is that we can realize meaningful savings in our EV profitability.
And so, Paul, to summarize, the volume's a component of that, but it's not the only component. I mean, obviously, you're only just hitting positive contribution margins now. So I imagine there's also some of the annualization effect, and you also talked about ZEV sales and things like that. And so volume is one component of that $2 to $4 billion, but there's obviously a lot more on the year-over-year compare.
For sure. We're constantly making improvements in terms of the efficiency of production, as well as the part number reductions that Mark has talked about, as well as we should see some mixed benefits coming in with, the Cadillac Escalade IQ and some of the other vehicles that are coming to market. So there's a lot going on, a lot of moving parts, but that's just our best look where we are today on our journey. But again, the most important thing that we can do as a company is get to that positive contribution margin. And I think we've got a good roadmap. And I think we've proven our resiliency in that, even though we're at the lower end of what we projected our production to be at the beginning of the year. So, continuing with that kind of scrappiness is, I think, what sets this team apart.
So just for a point of reference, GM was number 2 in the third quarter of 2024 for electric vehicles. That was behind, of course, Tesla, beating out Ford, who was the previous number 2. So are we talking about huge numbers, delivery numbers for GM? Absolutely not. But are we talking about, a positive direction, the way that they're moving? Yeah, absolutely. So I think that GM has settled a lot of their technical debt, or they're addressing, I guess, a lot of their technical debt. We talked about them doing away with the Ultium platform. They're moving to prismatic cells. There's lots of things that GM's doing to try and dig themselves out of the hole that, dig themselves out of the hole they dug themselves. Yeah, there's lots of things they're trying to do to in the fire service, we use a term that is the un-F yourself. So they're trying to un-F themselves right now. But yeah, I think that this is definitely a positive step for them for sure. Let's go ahead and move to the next question.
My other question was just on your manufacturing flexibility, and to the extent there's a material increase in tariffs on vehicles imported into the U.S., can you talk about how much flexibility GM has to shift more of its production domestically and or potentially offset tariffs with either pricing or cost reductions? Thanks.
Well, I think we're always working on cost reductions. I think it depends on specifically, what the tariffs would be. I would tell you, we are paying careful attention to the approach both candidates might take. And I'm not going to speculate on what either might do, but what I will tell you, we have and will continue to engage constructively with the policymaking process, regardless of the election outcome. When you look at the number of jobs created in the U.S., even with some vehicles that are manufactured outside, a lot of them are in our partners, from an ally perspective. So I think it's a very complex situation. When USMCA was formed, there was a lot of input being provided, and I think looking at the jobs that have been created, especially when we look at battery plants and some of the other facilities that we've leveraged for drive motors or drive units, et cetera, that's going to all be factored in. So we're going to work constructively, and so it's too hard to speculate, not knowing exactly what's going to happen. But to just reiterate what Paul has said. We're going to be disciplined and we'll be resilient and we'll make adjustments to the extent that we can to continue to drive growth and profitability.
One of the things that the analysts were trying to get Mary Barra and the chief financial officer, I'm forgetting his name, it's Paul, I think. One of the things they were trying to get them to do is answer what was going to happen in 2025. And really, it was, hey, how are you going to handle it if Donald Trump becomes president or Kamala Harris becomes president? But they weren't asking it in such a direct way. They were asking it in a way that is, I guess, politically correct's not the right answer, but like politically generic. They were just asking in these really bland ways, and they refused to answer in any way, shape, or form. So that's kind of where this question came from. But yeah, we get a little insight as to what they're thinking there. All right, I am having just nothing but technical issues on this. I don't know how the sound quality is going to turn out. So here's where we're going to end it. I do want to let you know that if you want to email me, you can. It's Bodie, BODIE, at 918digital.com. You can find me on Twitter at 918digital. And I'm going to leave you with a clip from Mary Barra. These are her closing remarks. And then I will see you on Tuesday. Hope you all have a wonderful weekend.
Again, I want to thank everybody for your questions. Appreciate your participation. I hope you look and you see our performance this year demonstrates that our focus is on building great vehicles, because great vehicles matter. Vehicles that have beautiful designs, the right technology, the right range of their EVs that customer really want to buy. We're going to continue to improve our ICE and EV profitability. We're going to maintain cost discipline, and we're going to continue to drive and look for ways to improve our capital efficiency. So in the weeks and months ahead, you'll see more clearly than ever how we intend to leverage the tailwinds that are within our control to deliver strong results in 2025 that are in a similar range to 2024. As we've said, we'll share more information about Cruise, China, and our other new collaborations as soon as we can. And as Paul said, we'll wrap all of this into formal 2025 guidance that we'll share in January. So until then, please stay safe, and I'm sure we'll talk to you soon.
That concludes the conference call for today. Thank you for joining.